Hello and thanks for checking out ChartGuys.com. We're proud to be one of the most successful technical analysis communities online, teaching you the skills to become a more confident, effective, and informed trader. Join our community of hundreds of analysts worldwide working together to learn the charts, generate profit, and achieve financial independence. For access to daily live chart analysis and market coverage, a thriving chat community, along with dozens of hours of exclusive educational materials. We look forward to seeing you. Let's check out some charts. Hey stock friends, checking in on the market. So SPY had a gap up open today, and today was the second day in a row where it's starting and heading into the open, looking at the setup, watching the hourly time frame, looking at the extended gap up open that was coming, watching the 4-hour time frame, eliminating the extended hours to make it clear, and saying, okay, what's the most likely scenario? And SPY gave us the same pattern that the dollar had on it. The dollar had a clear 4-hour equilibrium forming. And let's actually just pull that up real quick. And the dollar was ahead of it, where the dollar had topped out and started this consolidation, but it was just a very familiar chart looking for this to be the kind of setup that we saw on SPY. So, long story short, we headed into the open, and I said, if looking to establish positions today, I'm only looking bearish. I'm not going to be looking bullish. I don't like the risk to reward because the most likely scenario is a lower high compared to this 293.93 level. And if we're seeing a gap up open at 289.50, I'm looking for a lower high somewhere in the next dollar or two at most. That's the reward to the upside. The reward to the downside is looking for the 4-hour lower high to be set, and downside more significant than the potential upside. So that doesn't mean I'm going bearish. That means I'm not looking for any bullish entries. So I either see a setup where I like a bearish entry, or I don't make any bullish entries. And it's perfectly fine to not trade for the day. But again, eliminating half of the direction makes life a lot easier in terms of just staying focused and not getting flustered once the bell rings and the numbers start flashing. So we're still going to be looking for this range to tighten up on SPY. We have the high of 293, and I'm viewing this now as a shorter term tightening range. High of the bounce, low of the dump, lower high has been set, and we're looking for a 4-hour higher low compared to 283.47. Yes, we could just drop straight down and break that support level. I think that's the less likely scenario. And if that is going to happen, it will be accompanied by a big bear volume day. So if we don't see big bear volume, and if we don't see XLF and QQQ both dropping to lower lows at the same time on their individual charts, then we're not going to break that low, and we will see a 4-hour tightening range into Thursday or Friday. So we'll see where we open tomorrow or where pre-market is setting up. But the tighter the individual ranges get, the less trading opportunity there is within those ranges, and it gets to a point where the best bet is to just wait for the break to occur. And I'm talking about entries in new positions, not positions that you are currently holding. If you're in a bearish position, you're comfortable with clear lower highs still intact. If you're in a bullish position, you've got stop levels clearly lined up here, support levels. And individual names, a lot of them doing the same things. Some big tech names like Netflix, Amazon, Facebook, they've already dropped down and broken their lows of the August dump. And if we look at QQQ, QQQ has not done that yet. So there are definitely individual names that are weaker than others. And the names that have broken their August lows can go in a different category. You can even make a list next to your computer. Names that have broken August lows, names that have not, as far as individual names in an individual sector, and seeing who is stronger and who's weaker. Because that would tell us if SPY and QQQ break bull, we want to take the strong names bullish. If it breaks bear, we want to take the weak names bearish. So IWM is dropping down and breaking the August lows. And that's a potential canary in the coal mine. Some people look at IWM to give some lead clues. And the bears are certainly going to be pointing that out and saying, look, we're going to drop down and break bearish on SPY because IWM's breaking bearish. Not necessarily, but the more things that are breaking their lows of August, the more likely SPY will be to break the lows of August. So lower high was 151.08. Top of this bounce was 148.02. Every single bounce is just a lower high, keeping the bears in full control. We closed down at the low, and the weekly time frame has little support in this area, pretty much no support, aside from the December low. So QQQ still holding on, 4-hour equilibrium anticipated here as well. High, low, lower high has been set, and we're scouting where can the bulls form a higher low to see this 4-hour range continue to tighten. XLF is still weak. So XLF has a double bottom at 25.92, but the daily lower highs on every single bounce attempt continue to remain intact. If SPY bulls want any hope of breaking this August range that we are trading within, we have to see XLF break this pattern of a lower high every day. I don't foresee any way that SPY can break bullish over 294.15 if we cannot see XLF break its daily lower highs. And that's because XLF is the second biggest holding in the S&P 500 behind the tech sector. And after that is the healthcare sector, XLV, which is also looking down at its lows, 88.19, 88.32, a couple support levels. But our last lower high was 91.69, and the top of this bounce, just another lower high at 90.55, 4-hour time frame. Bulls have to hold these support levels tomorrow. If XLV and if other sectors one by one start breaking their lows like IWM already has, again, that just starts tilting the scales towards SPY potentially breaking bearish as well. And I expect to see a break of this daily time frame on SPY either Friday or early next week first thing. I would not be surprised to see, like I said, a 4-hour higher low hold. That's the most likely scenario in my opinion. If it doesn't hold, I would expect to see volume of 80 plus million, probably more than that, 90 plus million if we're just going to drop down tomorrow to a 4-hour lower low. Extended hours is holding up a little bit. We'll see. XPI already dropped down to a lower low, so joining IWM. Weekly time frame 79.31 broke. This is a 10-month equilibrium pattern breaking bearish. The next support level is 78.60, which we already broke. And again, below that is a cliff. No support. There's a gap at 75.24. That's the next level to be keeping an eye on the weekly chart. The VIX here trying to form a quick daily higher low at 1850. Have to see a break of 2130 to shift that momentum as far as a clear daily trend change, because we had the high, low, lower high, lower low, lower high, trying for the higher low and higher high. Have to get over 2130 to see that shift, to look back to test those recent highs. Gold bulls and minor bulls loving SPY weakness. So gold held our key 4-hour support. We built this base that we were watching at 1525. The bulls held that base of support and broke it today. Or I should say broke short-term resistance, bullish. 1555 is key resistance. And as long as the bulls hold 1525, they're still in full control. So that's now the line in the sand and the benchmark level where if I'm looking in tomorrow morning or tomorrow afternoon and saying, are the gold bulls still in control? If 1525 is support, the answer is yes. Silver exploded. Look at how much more bullish this chart is than gold recently. This is the gold 4-hour time frame over the last few days. This is the silver 4-hour time frame over the last few days. Very different. So we saw the break starting to happen yesterday on this XAU XAG chart with the bear break, and it just fell apart, which means silver blew gold out of the water the last 2 days. And this is a weekly trend change with a lower high and lower low. Silver very quickly gaining ground. That being said, with where the 4-hour RSI stands here on this chart, I would expect that gold is going to gain a little bit ground back on silver tomorrow. Whether that means they both pull back and gold just pulls back less, or they both go up and gold goes up more, I think we're going to see that, just to be looking for a 4-hour lower high on this chart, but a nice comparison between the two to know which direction to be looking. So we got the scenario where we had the 12-hour equilibrium on gold and silver and the tightening daily range. And then the question was, if we get a bull break, who do we want to play? And silver is jumping up and down and screaming me. But obviously at this point, that move's a bit extended. So looking at silver, 4-hour time frame, just going to look for a higher low wherever we consolidate. When we lose the 4-hour uptrend, we're just going to be looking for a daily higher low compared to 1692. Bulls are in absolute full control. This is the kind of breakout move where, in my opinion, it's going to be a climax top, as opposed to just seeing a weekly higher low and then eventually slowly lose the trend. It's going to be the kind of move that, in my opinion, has a very clear volume climax on the weekly time frame and a complete 180 turnaround where we see a huge surge up, a very fast pullback down, and there's no sign of that right now, but that's just generally how these euphoric breakout patterns reach temporary tops. And That's what I'm going to be watching for in these precious metals. But again, no sign of it at this point. And the break on gold on this monthly time frame was just perfection. And one thing I pointed out during the live stream today for members was how on the monthly equilibrium and how on all equilibriums in general, as I say yesterday, to learn those equilibriums, but this was a tightening range that we were watching for 2 years with our low, high, higher low, double top, higher low, lower high, higher low. And the most important factor here is that the bull break candlestick on the monthly time frame broke 1, 2, 3, 4 resistance levels that were lower highs all in one. There was no little bull break and then uncertainty. Is this our break for real? It was bull break, full steam ahead, here we go. And that leads to a lot of strength and continuation. And that's why equilibriums are better the tighter they are. Because if you had 5% in between each level, you're not going to break all resistance levels on the same bull move. But if you have all of these resistance levels, all 4 of them, within a trading range of 3.5%, it's much easier to take out all of those resistance levels at once and convincingly prove everybody in the market, bears you need to cover, and bulls, it's time to go long. So that tight equilibrium leads to clear conviction and follow through. Whereas if we had a lot of space and we took out one level and then we started consolidating, it's a much different picture. NUGT, bull break over 41.90. As soon as we saw S&P 500 weakness, we didn't start strong on NUGT, but it was just an explosion with significant upside follow through. And we ended with an equilibrium, looking at it on the 15-minute time frame. High, low, lower high, higher low, lower high. And I would love to open tomorrow within this range because we would look for a clear break and a short-term trade based off how that broke. When we lose the hourly uptrend with the last hourly higher low at 42.74, when we lose that level, we zoom out to the daily and we look for a daily higher low compared to 35.20. Oil, bull day today. Anything under 57.11 is just a daily lower high. Weekly time frame is all I care about. In the tightening range, 50.51 key support, 60.91 key resistance, and we're right in the middle of that range. Natural gas. So I was looking for the 4-hour pullback for the potential of an entry, but at this point the size of the pullback is significant enough that instead of being the potential of a cup and handle pattern, where we were looking for maybe a bull flag and then continuation, the pullback is significant enough now that we're looking for a good old-fashioned equilibrium. If this is our higher low, we're going to look for a bounce and a lower high and a tightening 4-hour range into the inventory report in 2 days, Thursday, 10:30 a.m. Eastern. Daily time frame, still holding on just fine inside bar today and just hovering under resistance. And if we get this bull break, we'll be looking at a bull cross of the 12 and 26 period moving average. I look back and say, well, we had a bull cross that had no follow through, so that makes it less of a meaningful pattern for me. But keep an eye on natural gas, and I will too. 4-hour time frame, most clear for now. That's what I'm going to be watching for the rest of the week. So I appreciate you watching, and we'll check back in tomorrow. 4-hour time frame for SPY as well as the most clear pattern. And we'll see if the bulls can form a tightening range and hold the 283s. Most important support, 283.01. And bulls just trying to stay within the range of Friday's candlestick. So thanks again. Do good things out there. We'll end it here with some Iceland from a year ago. And I'll see you all tomorrow.